Welcome to another S&P 500 analysis. Today is August 12, 2022. The latest CPI and PPI gave the S&P 500 a boost after they both posted better than expected numbers. Since the June low, the S&P 500 has gained more than 600 points, or almost 18%. Many market participants and talking heads are saying the bottom is in, and many are still waiting for a lower low. So what do you think? Is the bottom in or not? In this video, we'll look at the market sentiment, the market internals, and the price action of the S&P 500 along with the other major market indexes and see what the market is telling us. Stay tuned. Before I begin, let me remind you that I will post a separate video on Sunday where I will show you the levels and the scenarios I will be watching for the coming week for the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, the QQQ, and the Russell 2000 ETF IWM. In addition, I will also analyze a couple of the FANG stock, Apple and Tesla, and see what are some of the possible scenarios for these two stocks for the coming week. And if you like the content in this video and you have not subscribed to this channel, click to subscribe and be sure to click the thumbs up to give it a like and help promote this video on YouTube. On this weekly chart of the S&P 500, we see the range have expanded back up to the normal range for the week. The S&P 500 had a range of 168 points, and it gained 135 points or 3.26%. The weekly price action show it has broken this weekly NR7 candle to the upside, and it is continuing this one-time framing up, and it closed above this slightly upward 10-week moving average, but it closed below this declining 40-week moving average. The key thing the S&P 500 did this week is that it made a weekly higher high, so it broke this lower high, lower low price pattern. So we'll be monitoring for a potential higher low to put the weekly price action back into an uptrend. As for now, the weekly trend is neutral. Looking at this sentiment chart, we see the VIX close below 20 and the put-call ratio below 0.75. These two sentiment indicators telling us the market participants are getting back to risk on. Notice the VIX has been on a downtrend a few days before the June's low, and it came from a high of 34 to the current level at 19.53. This market-generated information is telling us the recent upward move was more than just a dead cat bounce or a short squeeze. Looking at the internals, the up-down volume ratio was strong on Wednesday with a 12-to-1 in favor of the up volume. That's the day the CPI came out better than expected. And on Thursday, the up-down volume ratio was positive even though the S&P 500 had a negative day with a gap and fade, and on Friday, it was a respectable 4-to-1 in favor of the up volume, with the S&P 500 gaining 1.73% or 73 points. The advanced decline was strong as well for Wednesday and Friday, and gave a positive divergence on Thursday. These two internals are telling us there was broad market participation in the recent rally. Here's something to notice before the June low. The up-down volume ratio was minus 60-to-1 in favor of the down volume. Then on the day before the June low, the up-down volume ratio was minus 14-to-1. And on the day that the S&P 500 put in that low, the up-down volume ratio ended the session with a positive 1.4-to-1. The key takeaway is the minus 60-to-1 up-down volume ratio was a capitulation. A lot of market participants that are not paying attention to the market internal did not notice this. Looking at the new high versus new low, 4 out of the last 5 trading sessions, new high outnumber new low. And the key thing to note is on the day before the June's low, the new low outnumbered the new high by 1,098. There was only one stock make new 52-week high on that day. And notice the number of stocks making new 52-week low during a recent uptrend, under 100, and on Friday, 24 new 52-week low versus 57 52-week high. That's another market-generated information telling us a capitulation had occurred prior to the June's low. Looking at the New York Stock Exchange cumulative AD line, it's been moving up in a strong incline slope, and the S&P 500 broke above this pivot high here, so there are no divergences. Now let's look at the Nasdaq market. The up-down volume ratio shows strong buying in recent rally as well. It even shows strong buying on Monday where the Nasdaq 100 was down for the day. The advanced decline also showed broad market participation in recent rally. The Nasdaq new high versus new low also showed the new high outnumbered the new low 4 out of 5 recent trading sessions. Notice those days where the new 52-week low was above 1,000, preceding the June low here. And on the day the Nasdaq 100 put in the June low, the number of stock make new 52-week low was 1,143 versus the 1,711 new 52-week low on May 9, where the Nasdaq 100 was 9.5% or 1,100 points above the June low. This is a sign of capitulation for the Nasdaq market prior to its June low. The Nasdaq cumulative AD line is also moving upward along with the cash index, the Nasdaq 100, and there's no divergence. So as you can see from these market-generated information, market participants are back in risk-on mode, and the internals are showing broad market participation in recent rally. And also, if one was to study the recent peaks and valleys of the internal, one can see the signs of capitulation leading into the June's low. Now let's take a look at the indexes, starting with the S&P 500. First and foremost, the S&P 500 is now out from the bear market territory. It's only down 11.17% from its all-time high. We saw the S&P 500 book above this 4180 resistance zone with better than expected CPI numbers on Wednesday, and proceeded upward to the new resistance zone near the 4286. On Friday, it closed at 4280.15. For the coming week, look for a potential pullback to digest some of the recent gain. The first level to watch for this potential pullback is this 4180 zone. This is a resistance turn into support zone. Then watch the CPI gap below this zone and look for a possible move toward the gap zone down here near the 4,000 level if it cannot hold above this 4,100 level zone. And for the upside scenario, watch to see if the S&P 500 continue to push upward. And if it does, then watch the potential resistance near the 4,400 area. The Nasdaq 100 is only down 19% from its all-time high now, and that also put it outside the bear market territory. We see it heading toward the potential resistance zone near the 14,000 level. For the coming week, if it will continue to push up, and if it does, look for this zone near the 14,000 level to possibly hold some resistance. Then keep an eye on these gap above the 14,000. The first one is near the 14,277, and the second one is near the 14,640. If a pullback materializes, look for the zone near the 13,000 area for first level of potential support. If it can't hold above this level, then look for the gap zone near the 12,200 for potential support. The Russell 2000 also came out from the bear market territory. It is only down 18% from this all-time high. It broke this 1935 resistance zone, so look for a possible backtest into this zone next week, then possibly dip down to test the 1850 area. The upside scenario is for it to move into this 2100 area, then consolidate. The Dow Jones Transportation is down 17% from its all-time high, so it's not in a bear market. The recent rally have moved it back up near this trend line here and above the 15,000 level. For a continuation upward move for next week, look for a break above this trend line and move into a potential resistance area near this 15,700. If a pullback shows up, then most likely we'll see it come down near this 14,500 and possibly move toward the 14,000 level. The Dow Jones Industrial was never in a bear market throughout this downtrend. It got close. It was 19.79% below its all-time high at its lowest point. So it missed the bear market by less than 0.25%. Currently, it's only down 8.68% from its all-time high. The price is near this declining trend line, and it could see possible resistance from it next week. And if it does, look for this CPI gap below this 33,130 to get filled. Then look for potential test for support near the 32,000 zone. For the upside scenario, look for a break above this trend line and move up to the price zone above 34,000. The New York Stock Exchange Composite Index did not enter the bear market territory throughout this decline. It was only down 19.84% at its low point. Currently, it is down 9.44% from its all-time high. Notice that tagged its first leg of this double bottom expected move by going above this 15,600 level. We're going to watch it to see what it complete its major move next week by going above this 16,030. So for the coming week, just keep watching for the completion of the double bottom major move to see if it get above this 16,030 level. Then look for the declining trend line for possible resistance somewhere near the 16,200. And on the downside, look for a pullback toward the price zone down here near this 15,000 level. For the 10-year yield, it is still hovering above this 2.75%. It closed Friday near the 2.85%. And the US dollar is still chopping between this 104 to 107 level and also near this long-term trend line. Watching crude oil for a possible bounce off the 50% retracement level near the 85.75 and to get back above the 100 level. If it dipped below this $85 level, then be watching this trend line in the 618 retracement for potential support near the 77 area. Silver moved above this $20.40 level and watching for a continuation move to see would it be able to get up to this $22.70 area. If there's a pullback, we still be looking at this $17.80 for potential support. Gold is back above the $1,804 price level. We need to get back to the 1850 zone and stay above that level in order to set up a move to possibly get back above the $1,900 level. The potential downside is still remain this price zone here between 1716 to 1677. In summary, the better than expected CPI and PPI helped the S&P 500 make a higher high, and this broke the lower high, lower low downtrend. The market internals and the market sentiment are showing broad market participation in the recent rallies, and market participants are back to risk on. There are still a lot of skeptics waiting for a bottom and waiting for capitulation to occur. Whether the June low was the bottom for this correction or not, no one knows until sometime in the future and after the fact. As you can see, I have pointed out the capitulation that took place on the day preceded the June low. We saw the extreme from the up-down volume ratio and the new high versus new low prior to the June low. Many talking heads and market participants do not know or even aware of these market-generated informations. Some of them are aware of the oscillator or indicators that are derived from these market internals, but unfortunately, these derived indicators are lagging and do not present the true picture of the market in real time. So has a bottom been made? Until the market tells us otherwise, we take the recent market messages and its price action as a yes. I know some of you think it can't possibly be when inflation is still near 40 years high and the economy is starting to slow down. How can the market go up with these poor fundamentals? All I can say is, have you heard the stock market is a leading economic indicator? Could it be it is pricing in what could be after the slowdown? I mean, this is just my opinion, and I'm just guessing. So anyway, don't forget, I will post another video on Sunday that I will present some possible trade watch scenarios and trade level to watch for the S&P 500 ETF, the SPY, the NASDAQ 100 ETF, the QQQ, and the Russell 2000 ETF, IWM, and the two FANG stock, Apple and Tesla. Be sure to smash the thumbs up to help me promote this video on YouTube. Thank you for watching and stay safe.